Welcome back. Alok Agarwal is with us, head of Quant and Fund Manager at Alchemy Capital Management. Alok, good to have you with us here. Back on the program, Prashant here. So a clean 1,500 points now from the lows of 3rd of March, Alok. What are your models telling you? What is your analysis? How much more? And will this continue as we come back next week?
Yeah, hi Prashant. I think the last time also when we spoke, our models were kind of suggesting that the bulk of the correction is over, although it's always difficult to pinpoint the exact peaks and the troughs. We are not really surprised with the kind of bounce backs that we have seen in this market. Among the indices, we saw that whether it is the large caps, the Nifty 50 or the Nifty Next 50, mid and small, everywhere there's a bounce back. Anywhere from 5 to 10%, the indices have bounced. Conditions are changing both locally and globally at the economic level as well as some of the corporate level as well. So which kind of gives us confidence that this recovery is possibly not just a 2-week recovery. It has much more legs to it. At least for a few more weeks, we can see this recovery pan out. The short covering, etc., is likely to pick up. And yes, we remain positive, at least in the near term. And then as things pan out, as things unfold in terms of growth numbers, that will decide the fate of the market for the rest of the year.
Alok, hi. So as a fund manager, are you all in? Have you, are you still holding on to some cash? And what have you been buying in the last 1 month, or should I say last 2 weeks, as the recovery has ensued?
Difficult to say. Hi, Reema. Difficult to say about the last 2 weeks. My models do not go for a cash creation kind of a methodology, although it swings between whether one has a little more aggressive approach or a defensive approach. Yes, even now the approach is a little more defensive, but not via cash creation, but via giving higher importance to the quality and the balance sheet than on the growth projections alone. So yes, there have been changes in the last few months. There has been more increase in the exposure to consumer discretionary, some of the domestic healthcare, and some of the financial services, especially on the capital market related stuff. So that's where the increase has been there. The decrease has been there primarily on the industrial activity oriented sectors.
You know, I was just looking at what has done well, Alok, from the lows. It is all manufacturing / industrials. You throw in, names like defense and, pipe makers and whatnot, but no consumer names. Maybe a few, but they are the exception rather than the rule. It's pretty stark. So all this, and especially, for a brief while after the budget when they announced those tax breaks, and we were in the midst of a correction anyway, the feeling was maybe whenever the market comes back, it's going to be consumer names which will come back, but no such thing.
No, I completely agree, Prashant. And, the consumption basket also needs to be looked at a little more closely. All these years, we have been more attuned to look at consumer basket, especially in terms of staples and discretionary. And discretionary typically meant something like an auto or some maybe food businesses. But, the recovery that we have seen in some of the spaces like hotels or in some of the airlines, I would say hospital is in between a pharma or a consumption. These are the sectors that are actually done pretty well, not just on the back of the price moves, but the earnings growth in those sectors and the projections out there are only showing further visibility of growth. So yes, certain baskets of consumption are doing pretty well. And as you rightly pointed out, some of the industrial names had seen significant correction, 40-50% plus kind of correction. Some of that could have been warranted because of some excess moves that had happened. But, markets, they tend to move in excess both on both sides, on the exuberance as well as on the fear side. So we are seeing some bounce backs in some of them. Not all industrial activities or not all industries are the ones that we have reduced exposures to, but some areas like the defense, etc., they are still holding on to structural growth prospects where the outlook is remaining positive even now.
You said you've increased your allocation to capital marketplace?
Yes.
Okay. And what is it?
The capital market space, if I were to highlight, Reema, now there will be multiple of them. So there will be wealth managers, asset managers, the exchanges, and some of the processors as well. So across the gamut, they are into the financial services side. The rising penetration in India barring the recent reduction in volumes, but the rising penetration in India in terms of capital market penetration and participation by the public, that's likely to ensure that these companies continue to do well. And they do not have any balance sheet risk in terms of lending as well. So the growth prospects as well as their deliveries are actually quite at the top.
Any names in particular, Alok, which stand out to you?
Also difficult to give names, Prashant, but there are
which category? Exchanges you're talking about. Only exchanges.
So the exchanges, yes, both the listed exchanges, be it the MCX and the BSE, we are positive on them. The wealth managers and some of the asset managers, some of them are combination of all these businesses as well. So combined, we do see large growth prospects. And Prashant, the interesting part is some of these businesses are actually trading at 15 to 20 times valuations for growth rates in excess of 20%. That's a difficult combination to get these days in the market.
Alok, lots of changes in the insurance sector. So many announcements, deals in the last 1 week. Hinduja Group, Patanjali Group, Bajaj saying they're going to go solo. They're breaking their partnership, 24-year partnership with Alliance. Your thoughts on insurance sector and anything that's, in the changes that we've seen in the last 1 week, what stands out?
Interestingly, Reema, there are certain sectors which, as a sector, they hold a lot of promise and growth for the long term. But sometimes it gets difficult to pinpoint and go to the stock level for the investment purposes. The kind of regulatory changes that keep happening in the sector, that also hinders visibility of growth and the certainty factor to it, due to which currently we do not have any insurance name into the portfolio. But yes, this is a sector that we do see growing for a longer term. Currently, not really there in terms of investment. But yeah, we'll be on the lookout for more visibility of growth in there.
No, point taken. Let's just put some of these big movers today up on the air. So Manappuram, of course, news related, but look at Tejas Network, for example, right? Across the board, it's between at least 10%, and of course, in the top tier names, 30-40% bounce as well. Tejas, the recent low was on the 17th of this month, which is, I think, earlier this week. The low was about 646. We've recovered about more than 150 rupees from there. Jupiter Wagons is seeing a big move today, 11%, 348 right now. There is Reddington, which is coming up. It didn't obviously fall very much at all in the correction, but 250 or so on Reddington. There is Ola Electric, which is coming up, but you get these bounces once in a while, but that's eventually faded. We'll see. Raymond is coming up nicely. The low recently was about 1200. And it's bounced 20%. Stocks at about 1,500 now, a little over 1,500. I mentioned Chennai Petro and MRPL earlier. There is what else? HCC, there was that order with Tata Power, and of course, completely crashed. Tata Power low was 21. Stocks at about 27 right now with today's 10% move. Viatech Vabag, there is of course news there, about 8% in the green. JM Financial is up about 6.5%. Lots of names, lots of volume-led moves here, which are coming through. A name like EQ, I think, which is fairly recent listing, I think. Not fairly listing, fairly recent, but listed in June of 2023. It listed at about 390, stocks at about 285, but the recent low was 166. So that's a 100 rupee bounce on this one from the lows very quickly. And SIS Limited, the security and security services company, lots of names. Skipper Limited is another one, about 4.5% pop. There's Green Power, all decent sized volumes as well. So it's not as if this is all happening with less volumes. And of course, market breadth remains about 3:1. Yesterday it was about 2:1. It's a little better this afternoon. Just closing thoughts, Alok, to your mind, is it possible as we get closer to the 2nd of April dateline, the market turns a little cautious? It'll be natural, right? Wait and watch and then take a call. Or you think, one should go into this one, especially if you're trading. If you're owning stocks and you've owned them and you've seen them fall and then are bouncing, well, nothing to do. But if you're trading, what would your stance be?
From a trading angle, as it is, Prashant, one got to be in the side of the trend of the market. Currently, it looks like we are bouncing back, and this recovery looks like having further more legs to it. There have few more changes that have happened. So while the correction started off with the growth coming down, with the kind of liquidity injection in terms of open market operations that the RBI has done in the last couple of months, it is not a mean thing. Overnight, we also heard in the last 2 days when the outlook on the Fed rate cuts came through. One of the data points that skipped everybody's attention was the fact that the balance sheet runoff, which was at the rate of $60 billion per month, that has been reduced to $40 billion a month. This is a significant number because every time they have done that in the past, the balance sheet reduction program being reduced further, that has led to an increase in the market and the risk perceptions and the response doing better. So one of the events, as you said, 2nd April being on the tariff side, once that event is further out, with each increase, anybody sitting out or sitting short in the markets might have a difficult time, if the markets continue to rise higher. The growth numbers look better. The economic numbers are bouncing back. Even if I look at one of the numbers that I look at for the proxy for the India's economic growth is GST collections. From May till December, we were hovering at 6.5% to 10% kind of growth numbers. Last 2 months have been at a 9 and a 12% growth. So the numbers are looking up, going by the way the monetary easing is happening in India and the regulatory easing is happening in India. Things look up in terms of growth bouncing back. And once that hurdle date of 2nd April is taken out, I'll not be surprised if this recovery actually gathers further strength.
Thank you, Alok, for joining in. Enjoy your weekend. We'll get into a break. On the other side, as always, we'll get you a check on what dealing rooms are saying.